thank you for joining us for this edition of CBRE Resi Talks, where we're looking at the subject of the London lettings market. Is it booming? And I'm joined today by Mike Knowles, who's our Director of Lettings Agency, who's going to share his insights into kind of what we've seen throughout the COVID period with the lettings market, and then looking more importantly, what are we seeing right now over the summer months going into Q4 and what that means as we look ahead for the London market. So Mike, thanks for joining. Could you just give us a quick overview of probably what was the biggest impact of COVID on the London lettings market?
Thanks, Luke. Well, I guess first of all, the lack of international and domestic travel meant that tenant demand reduced significantly. Now, every year we see a large number of international students and professionals coming to London from across the globe, as well as vast numbers of domestic relocations. However, this just simply didn't happen due to COVID. Now, at the same time as this, lots of properties that had been leased already by service department operators, they also returned to the market because their corporate and short-term leisure stays in London also stopped with the travel restrictions. We also experienced widespread lease renegotiations with tenants unable to afford their rent. So the landlords had to lower the rent just to keep their tenants in place. And then aside from that, we saw a large proportion of renters actually leaving London and exiting their tenancies when they were told to work from home during the various government lockdowns. So essentially the net result of all of this was that we just had so many more properties on our books than ever before. And that was driven by the lack of demand. So we saw huge competition from landlords to attract tenants, which then led to significant rental price compression.
As a sort of guide, where would you say the sort of rent reductions and sort of was a big change in the void periods as well as a sort of indicator to give context?
Well, I mean, according to Zoopla and also our research kind of echoes this, that rents actually fell 3.8% year on year since the start of COVID. But void periods were actually hit quite badly. So they actually extended to on average over 3 weeks. In some cases, voids were actually much longer than this. And we saw that particularly with the kind of bigger and more expensive properties in central London. And these just became incredibly tricky to let because we had so little tenant inquiries compared to before. And the higher end of the market really suffered because of a lack of corporate relocations at this price point.
Okay, so that helps to sort of set the scene for what we saw over maybe the last 18 months leading into this summer. How's the London market responded over the last few months? Have we seen a big change or is it still much the same?
Well, I guess we kind of originally anticipated quite a kind of sharp drop, which we saw, and then a kind of a steady recovery, looking like a kind of famous American brand of sportswear like a Nike. And that was especially in prime central London. We predicted a slightly more elongated Q3 kind of busy market, I suppose, as people returned to the offices and international travel was then allowed and the vaccine rollout progressed throughout the first half of this year. But quite simply, I mean, the bounce back has exceeded our expectations to the extent I've never actually seen a marketplace quite like this. And I guess in simple terms, it just almost seems like we've had last year's and this year's new tenants coming to London, but all at the same time. And just because we had so many more properties from before, as I said, it's been incredibly busy over the last few months and it's just showing no signs of slowing down at the moment.
Okay, so that's pretty positive. What would, again, to give our listeners a bit of context, how about applicant numbers? What have we seen there?
Well, the applicant numbers drive our market, and I think some of the figures that we've looked at over the last few weeks and months are just showing and painting the picture of why this bounce back is really pronounced. So in August this year, we registered a staggering 300% more tenants than in August last year. So I guess to kind of put that into perspective, the number of new tenants registering in August this year was almost half of the total number of tenants we registered in the whole of 2020. So it's a massive number. Then I guess if you kind of compare that to 2019, which I guess you could call the last normal year, we registered 223% more new tenants in August this year than in August 2019.
Wow, I mean, they're incredible.
Incredible, but then again in September it's even more incredible. So far we're at over 800% more tenants than in the same period of 2020. So it just shows how the demand has really driven that bounce back. You know, these are numbers that we're comparing to before and during the pandemic, and it just shows that it's just been so much more pronounced than we predicted. And I think it's worth probably just mentioning, in terms of who the tenants are, you know, in August, our central London office, we saw students account for 60% of our new tenancies, and professional tenants made up 35% of our new tenancies. And these people are coming from across the globe again, which is amazing, with international travel allowed again. So a large majority of students came from Asia, from Europe and America. And as we know, they usually move to London with their parents paying their rent for them, and usually they pay the rent in advance, which is great for our clients.
Yeah, I mean, it's incredibly positive picture then, but I imagine that must be putting some pressure on stock levels.
You could say that, yeah. So I mean, as I said earlier, we came out of lockdown with more properties on the market than ever before. But this demand I've been talking about, our stock levels have fallen by nearly 90% in the last few months, which is again another crazy number.
Yeah, I mean, these are, I think you have already said this already on the call, that this must be something we've just not ever really seen before. And has it been enough to get rents back to pre-COVID levels now?
Yes, I think so. I mean, according to the data, so Zoopla have reported between May and July alone, that rents rose 2.3% in the 12 most central London boroughs. And that's obviously before the mad kind of demand that I mentioned just there in August and September. And HomeLet actually are individually reporting a 3.6% increase in rent in just August alone. So September and beyond are looking pretty good. And then I think just to reference the voids, Luke, that we spoke about earlier on, so the voids have actually dropped to just under 2 weeks now. So compared to the 3 weeks before during COVID, it's already an average of renting a week faster than before. And then as kind of the cherry on top, I guess, that because there's so little stock on the market, there's actually competing offers on the same properties. So in some cases, some of our achieved rental prices are actually going over the asking price, and some of them by quite some distance. So I guess overall for me, this is kind of correcting the decline in rents that we saw. Our research team, therefore, are predicting this to continue into next year with a 3.6% rental growth forecast. So the forecast does look very good.
Yeah, I was going to ask, yeah, so in your view, what next, I guess, but in part you've answered that. Is there anything you'd want to add?
Well, I guess what next, you know, every day is different at the moment. It's taken us kind of by surprise, the sheer demand. We knew there would be a demand, but how big that has been has taken us by surprise. But usually the kind of Q3 surge, it kind of diminishes in mid to late October before quietening down for Christmas. But as I said, it just remains to be seen if this year's surge continues longer than usual. But with stock levels as low as they are currently, as I said, we're 90% down on stock. We can't see anything else than rents just remaining quite robust, continue to growing, and void periods decreasing as well. And what we've actually found, I think it's incredible, we found that tenants are actually, they're increasing their budgets, or they're delaying their move dates to find properties, because there's just so many people looking for the same thing at the moment. So I just see that market continuing. And just slightly longer term, I know we're kind of looking at the next kind of the rest of this year. Our research team is saying that steady growth will continue into 22, as I said earlier, but also similar numbers for 23 and 24. So around 3.5, 3.6% growth per annum. So I guess medium and long term, it just looks very positive out there.
It does, looks very positive, maybe other than, I guess, stock will be the challenge. And just probably bring a reference in from our sales team's work as well. We're seeing far less of the new homes supply in London going to the traditional buy-to-let investor. So I imagine, is that putting even more pressure on the stock, that you're beginning to see less of that new home supply coming through?
Yeah, I guess kind of since the start of COVID, there's been quite a well-documented kind of negative trend on new home sales to traditional buy-to-let investors. But good news is this is starting to creep up again, and it's really, really welcome news to us, as you say, with the low stock we have. I guess though, but in today's market, it is having an impact because of the kind of the backlog that we haven't had. So our student and corporate tenants who are registering in their thousands, they're particularly kind of attracted to these new build properties. And because of these sales being reduced during COVID, it has affected our pipeline of completed new builds, which, you know, we need in today's marketplace.
Yeah, and I guess that probably also leads us on to the big new trend within residential development is build to rent, you know, whether it's multifamily, single family housing. What's the significance of that coming through and helping with this stock issue?
But I guess our build to rent schemes are performing really, really well at the moment because simply they have the stock. Whereas in some areas in London, there's just little to no availability at all with kind of traditional rental stock. So, you know, the build to rent product, it's usually slightly more expensive than traditional rental stock. You know, reasons for this include the locations, the new build quality. You know, most of the time they're fully furnished. Some of them have bills inclusive. Some of them have amenity space, for example, gyms, swimming pools, that sort of thing, a concierge service or co-working space. I guess all of those things together, you know, normally make the rent slightly more expensive. But just with the demand that we're currently experiencing, tenants are actually flooding to the build to rent stock because, as I said, they have it. And the lease up rates are exceeding the expectations for us and our clients. And that is really important because they no longer need to offer kind of big incentives to kind of tempt the tenants in and aid with their lease up rates.
Yeah, that's interesting. And just actually thinking with more with the consumer mindset, we in the industry are all fully aware of build to rent and its emergence and how much of the new homes pipeline it's taking up now. Do you think your traditional applicant who's coming in looking for a 1 or 2 bed flat actually really is aware of what the difference is of build to rent versus just traditional new homes that they would have rented from a private landlord?
I guess the short answer is no, Luke. I think I just don't think the typical London applicant is aware of build to rent as a concept. And I think a lot of this is sometimes something to do with the fact that buildings are not traditionally located in areas which tenants will recognise, especially those tenants from overseas. You know, I mentioned earlier all of those students, especially from kind of Asia, America and Europe, they don't know London that well. So they're not kind of attracted to those sort of locations where these buildings currently are. But that being said, we've got ever improving transport links, especially with Crossrail when it opens. And many of these buildings are actually a lot closer in terms of transport time to central London than people think. So it's closer to work and university and that sort of thing. But overall, I guess, you know, it's a relatively new concept in the UK. It's a sector which is seeing massive investment and it's really growing rapidly. And obviously we've got a long way to go to kind of reach the levels of America with their multifamily housing, or as we call it, build to rent. And I just think we need to work with our clients closely just to raise awareness of the benefits of renting in a build to rent scheme as it becomes more commonplace in London and also the UK.
Yeah, I mean, that's interesting because this could just be that moment in time where that lack of stock forces people to look at this new option of build to rent, and actually it just really could help awareness improve around it, which I think would be, you know, great for the sector. And clearly there's a lot of our clients you know, investing in this space. So that's all sounds like very good news. And thank you for giving that run through, Mike. I think it's been very helpful and good to hear your sort of first-hand knowledge of that sector. So thanks for your time.
Pleasure. Thank you, Luke.
And to anyone listening, if you have any interest in this space, you want to ask any questions, don't hesitate to get in touch with either Mike or myself, and we'd be delighted to help with any of your questions or put you in touch with anyone in the team who's better placed to do so. So thanks for joining us. Bye-bye.